Welcome, aspiring traders, to the Learn to Swing Trade the Stock Market podcast, where we focus on unraveling the mysteries of the stock market and guide you on the path to consistent and profitable trading. I'm your host, Brian Montes, fellow trader and founder of the Disciplined Trader Academy. So we are going to focus on this podcast to help demystify the complexities of the stock market for beginners and experienced traders as well. From understanding the fundamental principles to mastering the art of swing trading, our goal is to equip you with the insights you need to navigate the market with confidence. We'll explore topics that matter to new traders, from decoding market trends to developing disciplined trading strategies. Expect practical tips, expert interviews, and real-life stories that shed light on the intricacies of the stock market. Swing trading is an art that balances precision and discipline. It's about understanding the market dynamics, making informed decisions, and most importantly, building a strategy that suits your style. So if you're ready to embark on a learning journey that could transform your trading game, you're in the right place. Subscribe, buckle up, and let's dive into the world of swing trading together. Hey, welcome back to the Disciplined Traders Learn to Swing Trade the Stock Market podcast, where we connect financial intelligence with swing trading, practical investing. Today, we're going to dive into a topic that's a little bit different than traditional conversations around swing trading and strategies and how you want to focus on your swing trading. I want to talk today about something that whether you're an investor, whether you're a swing trader, entrepreneur, just life in general, what you need to understand when it comes to the markets and appreciating assets versus depreciating assets. So I want to talk today about inflation and hurdle rates and make sure that you start to understand why the dollar buys less every year. So a little bit different topic, but I think it's really important that, if you're going to be in the stock market, even if you're only swing trading, and hopefully that's not all you're doing. Hopefully you have other investments and other vehicles to help drive you towards those building, a life where you have a portfolio of assets that are appreciating. And in order to do that, you have to understand inflation and hurdle rates and the real cost of money over time. Because the truth is this, it's not just enough to make money. You have to make money and outpace inflation. Otherwise, you will lose wealth, even if your bank account's balance goes up. So that's what we're going to talk about today and try and give you some perspective on this, because it's really important that you start to understand this, especially as the Fed starts to bring interest rates down and the federal government starts to turn on that money printer again. The more money we print, the more inflation we're going to have. So first, let's talk about what I call the silent erosion and what inflation really does. So let's start simple. Inflation is the rate at which prices rise, meaning that the dollar's purchasing power will fall. Your purchasing power over your lifetime becomes less and less as inflation rises. We are long past the days of 2% inflation as the Fed has always targeted, right? And the more the Fed prints money, the more money that hits the system, the more they lower interest rates, the more inflation we're going to have. Now, if inflation runs at 4% and your savings account pays you 2%, you're actually losing 2% of your real purchasing power every year. So think about it like this. $1 today will buy you less gas, less food, and less real estate next year than it does right now. And that's not just a data point. That is the hidden tax on your wealth. Now, central banks like the Federal Reserve target, like I mentioned earlier, about 2% inflation. But in reality, depending on what you buy and where you live, your personal inflation rate could be much higher. And most likely it is all throughout the country. It doesn't matter where you live anymore. Inflation is well north of 2%. Now that's where the hurdle rate's going to come in. So what is a hurdle rate? That is your personal benchmark for wealth creation. A hurdle rate is the minimum rate of return that you need to justify an investment or maintain your purchasing power. So if inflation is running at 4% and your goal is to earn a real return of 3%, your hurdle rate isn't 3%. It is 7%, because 7% nominal return minus the 4% inflation gives you a 3% real return. This is why it is so important that you understand what is going on with inflation and how it's devaluing your purchasing power. Now, this is the invisible math behind every smart investment decision. Now, I get it. We're not talking about swing trading today, but I want to get you thinking about how inflation is impacting your overall long-term wealth creation. Because when investors talk about beating the market, what they're really saying is, I am clearing my hurdle rate. Now, if you don't calculate that hurdle, you risk feeling rich in nominal terms, but in actuality, you're becoming poorer over time. So let me give you a historical perspective, the dollar then and now. Now, if you had a US dollar in 1970, it had about the same purchasing power as about 15 cents today. That's an 85% decline in purchasing power, all because of compounding inflation over time. So I'm going to say this one more time. In 1970, the same purchasing power was about 15 cents today. So $1 in 1970 only gets you purchasing power of 15 cents today. 85% decline in purchasing power. That is unbelievable. So even if your investments grew, if they didn't grow faster than inflation, your real wealth fell. And this is why investors like Warren Buffett focus on real returns, returns after inflation, after taxes, after fees. That's how you start building a life of wealth and building a portfolio that makes your family have real wealth. Now, how do you apply this? So, how do you set and use your hurdle rate? Well, to apply this in real life, there's four things you need to do. One, you need to know what your inflation baseline is. Now, we all hear CPI, that's the national average. Now, if your lifestyle leans towards housing, healthcare, or education, your personal interest rate could be much higher. So you have to know what your initial inflation baseline is. And that a lot of that is tied into where you live and how you live. Second, you have to set your hurdle rate accordingly. Let's say for easy math, inflation is 4%. You want to grow your wealth by 3% per year in real terms. That means your hurdle rate is 7% before taxes. And then you need to compare every opportunity against that hurdle rate. If a bond yields 5% below the hurdle, you're not going to create real wealth. If a business project or equity target offers you 12%, you've got some room for risk and reward. If your checking account pays 1%, well, that's a guaranteed loser in real terms. So you truly need to understand what your hurdle rate is to start making good decisions, because you have to have assets that appreciate more than inflation. And that goes for businesses as well, right? Because if you're going to buy a business or run a business, that's another way for you to beat the inflation rates. But you have to have assets that are going to outpace it. And you got to review this regularly, right? Because inflation changes, which means your hurdle rate over time could change as well. Now, inflation can be a strategy signal. What does that mean? Inflation, it's not just a threat, it's a signal. It's something to pay attention to. When inflation rises, it pressures central banks to raise interest rates, right? We saw that over the past couple of years, right? We came out of COVID, we printed all this money, we handed out all kinds of free money to people. And a couple of years later, we're like, wow, inflation's through the roof. Well, yeah, no kidding, because we gave out so much free money, and there's no such thing as free money. Okay. Eventually, we pay the price for that quote free money. Nothing is free in this world. So we printed money, we handed out stimmy checks, stock market took off because everybody was trading on Robinhood. And then all of a sudden we realized inflation was out of control. So what happened? The Fed started raising rates, right? And as soon as the Fed starts raising rates, that impacts the cost of borrowing and valuations in the stock market, and it can even hit those real estate yields. So they raise rates in an effort to, quote, cool the economy, right? This way they can, quote, bring down inflation. And I keep saying, quote, because here we are today in November 2025, and we've had a couple of rate cuts, despite the fact that inflation really isn't cooling. Inflation will not be going back to 2%. So for investors, it means this: assets that generate cash flow and can raise prices with inflation, like quality stocks or productive businesses, tend to outperform. Cash, on the other hand, is quietly going to bleed value. So understanding that inflation isn't just about protecting wealth, it's about positioning yourself very strategically. So if you take one thing away from today's episode, let it be this: inflation is the floor, the hurdle rate is your ladder. If you ignore inflation, your money will slowly sink. Your purchasing power will decrease. Your dollar will continue to lose value. If you set your hurdle rate right and make decisions based on real returns, you could start climbing towards financial independence. So again, if all you're doing is swing trading, no problem. But to build really To build a life of true wealth, you have to go beyond just swing trading in one account. You will have to start looking at how you can purchase other stocks in an investment like strategy that are going to outpace inflation. And you have to look at assets that are going to appreciate more than the rising inflation rate. That is how you will eventually start to climb and get towards true financial independence. As always, thank you for tuning in to the Learn to Swing Trade the Stock Market podcast. If you found this helpful, do me a favor, share it with someone who's saving, investing, learning how to swing trade, running a business, because understanding the true cost of money is the first step towards building real wealth. I hope you have a great week. Stay disciplined, and we'll see you next week on the Learn to Swing Trade the Stock Market podcast.